$20 million spent, $9 million market cap today. Do you know where the value lies, given the stage you're at? Because people aren't giving you value today. $9 million is nothing. It's a small business. So where's the bit where people go, now I think I understand what these guys are trying to do. You know, the exploration hasn't created much value. You've done the pilot plants, that hasn't created much value. What's the thing which is going to get people excited? Hello and welcome to Crux Investor. We spoke earlier today to Greg Andrews, who is the CEO of Search Minerals. They're a rare earths company with assets in Labrador, Canada. Now, they have spent $20 million to date, market cap of $9 million, or 10 years in the making. And we asked the CEO what's gone wrong and what's he going to do about it. Take a look at some of the topics we discuss in the description below, and you can click on the relevant timestamp. That'll take you to that part of the video. And if I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to see more videos like this, please click the notification bell. Let's hear what Greg had to say. Hello, Greg. How are you, sir?
I'm very good. Thank you, Matthew.
Well, lovely to have you on the show. You're going to explain to us all about rare earths, which is something that not a lot of people know much about, so I appreciate that. But first of all, why don't you kick off with a 1-minute summary on your business and we'll pick it up from there.
Sure. We're a TSX listed company. We've been in the rare earth space since 2010. We entered this space along with probably 500 or 600 other companies that were pursuing the rare earth game. But out of that, we were able to raise money when we really didn't have much. And now we have a district in southeast Labrador, Canada, that's 70 kilometers long by 8 kilometers wide. On that district, over the time, we've now have two 43101 resources that we own 100%, along with over 20 other prospects along that belt that we'll continue to develop. Secondly, we have in the rare earth space, you need to be able to, you may have the resource, you need to be able to separate it and make it into a sellable product. We have created that with 2 pilot plants, and with that we have a proprietary direct extraction leach technology that we use on our material only. So with those 2 key elements that we feel that we've tackled, we want to be a low cost, capital cost, operating cost producer of mixed rare earth concentrate and further oxides to support a rare earth supply chain in North America or Europe.
Great summary, thanks for that. So let's kick off with the first point. Okay, so I always say to investors, or subscribers, you've got to understand the thesis behind the, in this case, commodity that you're thinking of investing into. So can we just try, or could you help us understand the macro picture, the rare earths scene, as it were? Because most people associate it with China. You're not in China. Very few people, very few of the big producers are. So how does a small rare earth company outside of China survive? Where is it going to position itself? So what's it going to do? So why don't you kick off with the first question, which is, what's happening in the rare earth space at the moment?
Yeah, so there's been some, certain development with looking to secure rare earth supply chains outside of China. China dominates the space, which is fine, but it's looking at the other North American and European rare earth supply chains to ensure that they have product. And within that macro world, when we entered the rare earth space back in 2010, we didn't have the electrification of vehicles as our main driver. It was more, we were competing with high prices of rare earths. That was really what driving it, with us saying that the computers and cell phones will be the drivers. That's changed slowly as the world is changing into electric vehicles. So that's the push that we believe that we've survived we've continued to work in the rare earth space, waiting for the EV market to catch up, and we believe that we are in that upward trending market where we are positioned with our company now.
Okay, so again, I do want to get into the company, the assets, and what you're doing, but just a little bit more in terms of the space. So there's a huge dependency on the EV revolution, but there's other sectors too, security, space, industry, etc. I mean, what do you know about those? How are you positioning yourselves for that
Yes.
space as well? Because the EV revolution is coming, but it's taking a little bit longer than everyone had anticipated.
Yeah, and the rare earth supply chain is very complex. From where we enter the supply chain, we'll create an oxide which would get sold to a metal maker, who would take that metal and sell that to an alloy maker. That alloy maker would sell it to the magnet maker, and the motor maker would then sell it to the OEM. So it's very complex all along that channel. So we want to make sure that we are able to compete on price. That is key. But what's happening in the macro world is a lot of collaboration with governments, U.S. and Canada collaborating, which is good. Australia is collaborating. Europe is collaborating. So there's a lot of demand with collaboration of trying to understand where is the source of rare earths going to be to support this supply chain that people are talking about in North America, Europe, and Australia.
You've got an asset in Labrador, Canada, which is, I guess you'll tell us a little bit about the asset and the scale and opportunity. But what are the things that you, as a management team, are doing to insert yourself into that supply chain, or get noticed by that supply chain to enable you to, be able to sell, or quite frankly, work out, do you process this yourself? I mean, how far up that chain do you try and work? And where do you think the value is?
Well, the value for us is, so we will produce individual rare earth oxides, so neodymium oxide and praseodymium oxide. We will sell those to a metal maker. That's where we exit the supply chain.
Got it. So you know where you're at, and there's no desire to move further up that food chain, because I presume the kind of capex restrictions, prevent you thinking that way today. Well, it's a $9 million market company. I guess you're focused on
that's right.
The bread and butter bit first. Okay. So you know where you sit in that supply chain. So just allow us to have a bit more of a conversation around that. Can you get into your resource? Tell us a little bit about that, because I think we're talking about FOXTROT and Deep Fox as the two 43101 projects, right?
Yeah. So what we're blessed with where we are with our resources, number one, we have a great infrastructure already in place. Mm-hmm. Our two resources in our district are 13 kilometers away from each other. We operate in a town called St. Louis, Labrador. There's a Trans-Labrador highway that runs through our property, so that infrastructure's there. There's power there, which would always obviously have to be updated. There's a deep sea port so that we can bring things in and build and whatnot. And so there's 3 local communities, all within an hour's drive. So there's can be a workforce there. So we're blessed in that sense of logistics for the resource. Number one. Number two, we operated our first deposit resource was FOXTROT, which has a PEA on it. It's a 14-year life mine, 8 open pits, 6 underground. It gave decent NPV values, but we had another property called the Deep Fox, which was more compelling because of the surface expression, and I can get into that a little bit. But it also has higher grades. And we wanted to show the market that we actually did have a district that contained 2 resources, so that we can optimize material to feed most likely a central processing facility within close proximity of those 2 deposits.
Right. Okay. You mentioned earlier on, this started, in fact, one of your presentations says 2009, and you mentioned just 2010 when you kind of kicked this off. So that's 10 years ago, right? So help me understand how a company starts up and what it's got to get through to get anywhere near production, right? So you're 10 years in the making so far. So what's happened during those 10 years? You started exploring, no doubt. So do you want to talk me through that?
Sure. So we started exploring. Back in 2010, there was quite easy money access. We were able to raise $10 million when we really didn't have anything other than some claims. But out of that $10 million, we were able to create this district. And throughout that, we've been able, and out of that, we drilled 18,000 meters to develop that FOXTROT deposit, which cost probably about $6 million to do. Mm-hmm. But we were lucky to find that resource with that money's being spent. throughout that time and drill program, the rare earth prices dropped and access to capital started to close down. However, we couldn't walk away because we had such a great resource. In that time, we continued to work on our district. We have a great team with Dr. Andy Miller, who's been with us since day one. Mm-hmm. He's walked every kilometer on this district, and he continued to develop it. And that's where the prospect of Deep Fox came in. And how we sort of define our resources and how we value them or look at them is FOXTROT is our base case, which has we're blessed with our deposit being on surface. So we do an extensive channel sampling, which we can outline sort of the surface expression, and then our drilling program always tries to validate that what we see on surface is what we see down below. That was the theory at FOXTROT. So with FOXTROT, surface dimension, 400 meters by 10 meters. The Deep Fox, which made it so compelling, was on surface expression with our extensive channel sample program, was 400 meters by 30 meters. So quite an improvement in sort of mine design and potential resource. But of course, we needed to drill that to show that we did have the model of what we see on surface is what we see down below. And that's exactly what our drill program did that we completed in 2018. So from that, what we were making sure that we defined is that 30-meter width. That was very important to ensure that what we saw on surface was down below. So with a very tight budget and a drill program, we spent $1 million down to the 100-meter interval and received a significant enough balance to call a resource. It's not enough to show the big economic picture that we believe it is. So we'll continue a drill program, which will continue this year to validate it so that we can update our PEA.
Okay. A few things you said there. I just want to understand these because I think it's important for people to understand. Okay, so you've raised $10 million way back in the day. Have you raised any money since 2010? Yeah,
probably another 10 million.
Right. So
throughout the time. So we've probably around 20 million-ish dollars.
You're around $20 million bucks. Which how much of that is left? How much cash are you sitting on today?
Not very much cash. We have a very good shareholder base, so we tend to raise our money. We know exactly where we're going to spend it, and we know exactly when we're going to run out. And we've been successful in each of our programs to ensure that when we run out, we'll continue to raise money. We're hoping always as we improve that we can have some share appreciation so that we can continue at higher prices. That's been our model with our shareholders.
Okay, so this area is quite important to understand because I think you went to raise circa 500,000 before Christmas. That was a number I saw in there? You eventually raised 70, took 70 this January. Your announcement this January, is that right? Were those things connected?
Yeah. So the raise that we were doing that was 500,000 that we were looking to raise in a flow through for our drill program. And what I was trying to capture there was some funds that had some flow through monies out there.
Right.
And as we tested the market, we had some very positive responses of that, except a lot of their funds had been used. So because we're not going to be drilling till June, July, they'll come back in March and April is when the time. So I was a little premature on trying to get that.
Okay.
Those monies for the flow through because they're strictly allocated for drilling anyway. They're not used for overhead. They're not used for those. So it was a strategic plan to see if there was some interest with investors and some new funds.
Understood. Okay, so flow through timing not quite right. You're going to go back at April, May time and sort of see if the interest is still there for the drill program.
That's correct.
Okay, fine. So $20 million spent. $9 million market cap today. You mentioned or alluded to earlier on the volatility of the prices within rare earths. They are hugely spiky. Traditionally have been for a long time. So right now you're looking at Praseodymium and Neodymium. Is that right?
Our resource really it hosts the permanent magnet.
Right.
Market.
Okay.
It will create 85% of our revenue, and that's somewhat standard in a lot of rare earth mines. We're blessed that our deposit is it's hosted in a peralkaline volcanic rock, which is somewhat unique, and because of its volcanic, it's quite fine and it's porous. So our technology, which we'll get into later, is able to get in there and liberate the elements. And because of the space that we are in with our rare earths, we also have a little component of the heavy rare earths also. So we have a nice blend mix of the lights, the neodymium, praseodymium, but also dysprosium and terbium, which add value because they're higher priced elements.
Right. So rare equals expensive sometimes, but not always in the rare earth space. Okay. Another phrase you used earlier was you've got a district-wide project. You talked about extent FOXTROT, which the PEA came out in 2016. You felt it was good, but needed to be better for the marketplace, so you went after Deep Fox, which had better grades. You've extended the scale, the length and the width of the strike zone. Help me again with rare earths, because I think when you're talking about gold, you're talking about district wide and it's fairly homogeneous type deposits, etc. For rare earths, you're actually talking about you're talking about a 30-meter wide strike. And so how long was it?
400 meters.
400 meters. So it doesn't sound like a lot. I mean, I get the high value component, but again, investors looking at this, not understanding rare earths as much as you do, would go, well, that's not very big. So it's not very exciting, is it?
Well, it is, because it goes down at depth, down to 200 meters.
Right.
So it's not just I'm explaining the surface, and both deposits are open at depth. FOXTROT's open down to 450 meters.
Okay.
So that's the significance of it. What we find is that it's open at depth wherever we drill.
Okay, so again, maybe help me with some numbers here, because if I look at, I'm coming back to your market cap, it's not very big. I'm not quite sure, and you spent $20 million. You've done some exploration. You've got a couple of pilot plants. You're about to build a 100th scale, 1/100th scale. Sorry, what is it? A
demonstration plant.
Demonstration plant. And that's it. That's where you've got to in terms of the process, right? So can you help me understand I get the exploration bit and the scale of that, but the pilot plants, were they, I mean, what sort of scale were the pilot plants? Are these like lab tests, or is it a little bit bigger than that?
I'll get into that. And just before we finish off on the resource, with our 70-kilometer belt, the FOXTROT and Deep Fox are at one end of the district. And Randy has been working on another property called the Fox Meadow. And again, it's early channel samples, but what that's looking like is the width or the length could be 650 meters.
Right.
By 120 meters.
Okay. But
on surface. So that's really our next, that just shows the extent of the district being carried through for the 70 kilometers.
I guess what I'm trying to get at, Craig, is trying to understand where the value lies given the stage you're at. Do you know where the value lies given the stage you're at? Because people aren't giving you value today. $9 million is nothing. It's a small business. So where the exploration hasn't created much value. You've done the pilot plants, that hasn't created much value. What's the thing which is going to get people excited?
Yeah, I think the couple things that we hope will get people excited is we look at the Deep Fox resource announcement in November as really the kickstart of call it the new search, because what that did was take a 14-year life mine of FOXTROT with, not bad economics, but the Deep Fox economics, when we run those, changes the game significantly for us, because it will take us just with the resource down to the 100 meters. Will allow us to be at least a 25-year life mine. As we go down to 200 meters, it will extend that. So that the multi-generational type play life of mine project in this area is very well supported by both the federal and provincial governments of Canada, very well supported by our Indigenous group that is in our area. They're shareholders of our company, and very supportive of our local communities. So this is an area of focus that in Southeast Labrador, the opportunity to really be a leader in the rare earth space with the district size that we have is really compelling at that level, at all those levels.
Okay. When do people start giving you value for what you're doing? As I said, nothing so far for exploration. The demo plants haven't done anything for your share price. Where's the bit where people go, now I think I understand what these guys are trying to do? Because you're about, like I say, you're about to build a 1 in 100 scale demo plant. Is that going to move the needle?
I think that will help move the needle. And part of the process of getting the exposure and is starting to get out there. Like I said, we were sort of the same story up until November. So we are just starting our, let's call it our marketing to let the industry in the world, what the industry knows of us, it's getting the retail investors and getting the institutional investors to really understand what we have and what value that Deep Fox resource brings to the table as a game changer to our company. That's important, because just announcing drill holes and this and that isn't very sexy. So we need to understand, the market needs to understand, why is this so sexy? And the economics, unfortunately, we don't have economics on it at the present time. When we do our economics, that will be the indicator of the market going, wow, okay, that's what they do have. In terms of our processing is very significant in that, again, because the technology is our own technology that we develop, patented technology on this. We've been funded, which is fantastic, which doesn't show up really on our balance sheet, but we've been funded through our 3 pilot plants, both with the federal government and provincial government, to the tune of over $3 million. Non-dilutive financing, grants, and so, that's a very significant value that we've been able to bring to the company to continue to get to the end game. The end game is, can you make individual oxides that are cost competitive? And that's our model, and that's what we're trying to strive for. So you need to have a good resource, which checkmark we believe we do. The technology, we've proved that we have a mixed rare earth concentrate that we've been separating to giving to other refineries and other separations to know that it can be broken down with certain success on that. It's a mixed rare earth concentrate is a proven commodity. So the magic in our company is that we've been able to separate or build a concentrate from the ore that we have. That's the secret sauce to get to the mixed rare earth concentrate. Once you get there, you're not reinventing the wheel. There's solvent extraction refineries. There's new technologies. Those are the next steps that we need to do. The reason that we need the demonstration plant now, the demonstration plant 1/100 scale would be built on site. So that allows us to start training. That allows us to start the community engagement to show the people what we're doing. It allows us to ensure that our flow sheet is working fine and tweaking that. It allows us to produce quantities enough so that we can continue separating with our, the next steps of separation. And with that would be starting to get into the customers that would start to validate or qualify that the product that's being made out of our material is suitable for their needs.
So again, help me understand, because again, the time can kill companies, right? So I want to understand how much more time. I get the search minerals 2.0, okay, from the end of last year, you're going with that, okay? But you've got a whole bunch of shareholders from the 1.0 version who are still going to want to know, how you're taking this forward. The new investors coming in also going to understand how you condense the time frame. It's taking 10 years for phase 1. What are we going to do with 2.0? So the 100th scale demo plant, that suggests there's a much bigger one which will be built based on this scale operation. Is that, am I understanding that right?
That's correct, yeah.
Right, okay. And how does the scale demo plant differ from the pilot plant? Is it significantly different?
Oh, definitely. The pilot plant was run with SGS Canada, built specifically to run and test and engineer. It's very costly in terms of having engineers and scientists, going through all the processes, and it needs to run continuous. So both those pilot plants ran over 5 days, process like 7 tons of material type of thing to tweak the processing flow sheet. The demonstration plant would operate probably, it could run continuous, but 3 to 4 months at a time, running through. So it's a larger scale. You have more people you're training. So and one thing I'll talk about the demonstration plant. Our goal with the demonstration plant is once again to secure our government funding mechanisms that are in place in Canada and US for that, for also. And we would expect to, it's close to 70% could be financed with government programs. So our compelling story would be, we're going to build a $10 million demonstration plant. 7 of it is, government funded, let's call it, and 3 million is for the shareholders. We feel that that's a value proposition for investors.
Okay. But given that, even though 3 million of it is going to come from you guys, only 3 million of it is going to come from you guys, that's still hugely dilutive. So you've got to tell people why you need to build this thing, because is it going to allow you to go and create product which you can give to potential customers to test, to allow you to get forward purchase contracts, and therefore allow you to fund the full scale demo plant? I mean, what's the point of it?
Yeah, and that's exactly it. So it's to be able to show the market that you can build a consistent product. That we would then sell to the metal maker, those oxides. And the metal maker, alloy maker, and magnet maker could be the same company, by the way. And what that is that validates, and that would be, the end goal would be to get an offtake agreement with those customers, or purchase orders with those customers, because that's the only way the facility is going to be built. We're not going to build it and hope they come idea. So the significance of that is to continue to show the market that we can get to this stage of producing individual oxides at a cost, a cost competitive pricing to enter into the supply chain.
Right.
That's the end goal, and you need the customers before you can raise that money to do
totally.
that.
Okay, so nothing unusual about that. So if I may come back to timing again, assuming you're able to go tomorrow and raise the $3 million for that, and the, $2 million of G&A, whatever it takes to keep the lights on, how long will it take for you to get to the point where you can get all the necessary permits, licenses, and build this demonstration plant, this 100th scale demonstration plant, and then produce the product for customers to test? And how long do they need to test it? And at what point do they turn around and go, let's have a conversation about a long-term forward contract? What's that time scale? What are people getting into here?
There's going to be many things happening in that space. So we look to be in production, and in best case is 4 years from now. Okay. What's going to happen in those 4 years? There's going to be environmental work, which, we're just being honest, is probably going to take 2 years of that. There's a year and a half of just, you need a year cycle to see what it was in year 1 and what it became in year 2. We've started that process with our FOXTROT. We're looking now to actually blend our FOXTROT and Deep Fox environmental work together because of their close proximity, so that we can do the baseline studies and whatnot. Our next steps, so the demonstration plant is sort of is a process that we need to do. But in getting to production we need the environmental. After that, as the environmental is going through, we've had success with our demonstration plant's probably a year by the time that we get our funding in place. It's not going to be tomorrow. When you're dealing with government funding, it takes a process of getting that through, and then it would take 6 to 8 months to build. So we would look probably in the early 2021 that would be something that would be operational. And so that's an individual process that we need to do. In the background of getting the permitting, environmental, infill drilling, feasibility studies, that's the ongoing work, and that's 3 years to there'll be more infill drilling on the Deep Fox and the FOXTROT when you're getting into a bankable feasibility study. At that point, before we would engage that, is we would expect that we would have those customers or that offtake, and those would be our partners moving forward or at least be able to us to raise funds, be in debt, equity, whatever options are available at that time.
Okay. I just think it's important for investors to understand where the company is in the timeline and whether, what risk stage it's at. So if they get a sense of where you're at, they can go, well, some of my portfolio I'm happy in there, but others I maybe want to be further along that curve. So I think it's important for companies to spell it out.
Yeah, and we spell it out, and we always look at today's pricing and where we are in the shares and dilution and this and that. But we also, again, going back to that macro world, things can change overnight that could change the dynamics of the rare earth space, that obviously, like it did back in 2010 when the thing spiked. So we believe that you need to be further along. We've continued to work. Our model, we've done a lot with very little. So we've been able to produce, getting to that concentrate level with what we've been able to do is very significant, because when you're looking at risk profile, we look at our resource, not so much risk. It's going to be simple mining. It's going to be open pit mining. It will probably be contracted mining. It would probably be done 6 months of the year and stockpile, so that they're not mining, in the winter months, because our production rates aren't huge. So we've started this process of being small and growing to the market. So we have a small capital cost, which we believe is financeable at $150 some million. That's operating at 1,000 tons per day and creating enough product, 3,200 tons annually of product. We believe that's small and scalable and gets us in the game. If the market dimensions change and the dynamics change, our technology is scalable, our production is scalable. We can move to increase that. So we can't have a high capital cost project that needs a high output to finance that. We started be small and grow, and that's what we're proving as our model moving forward. Deep Fox allows us to add more material to increase some of our production without significantly increasing our capital costs.
Right. Okay. That seems a reasonable position to take. Other people might, do it differently, but if you're very clear about what you want to do, but because you've been at it 10 years, you've got 228 million shares outstanding, which is quite a lot for a market cap your size. Do you think that's putting people off when you're telling this story to them? And do you think it's stopping certain types of institutional or strategic investors getting involved with you?
We have a very good shareholder base. We have a large insider participation of 40%. Incor out of Geneva owns 32 plus with some.
Who are they?
Ventures. We have a very strong Newfoundland Labrador shareholder base. So, when we look at our shares and where we're at is, it's been those sort of same prices, but we believe that everybody, most from 2014 are in at these prices. So, we haven't spiked up, we haven't spiked low. So we haven't really given a person a reason to sell, maybe except for fatigue. But like I said, we've been going to, our fundraising has really been to the same people, the rights offering and our shareholders. So we're looking now to expand that shareholder base. And we believe that we have a compelling enough story of where we're at and what we have, and our market cap is what I look at. I mean, yes, there's a lot of shares out, but are we a $10 million valuation? I think we're a lot more than that. And that's what we have to tell the market.
Okay. So if you might, so who is Incor?
Incor is a investment fund out of Geneva. They invest in commodities, certain commodities, and they look for a technology edge to bring those properties of value. So they have a lead mine in Australia, for example, that used a technology that was able to put that mine back in production. So that they kind of lead with that. Is there a technology advantage that we can use that can make a resource doable? And that's really why they invested in Search also, because our technology allows us to be that low capital operating cost, because our flow sheet what was compelling for the government is why they invested is our flow sheet took out 4 processes that cause process and technology risk. We don't do grinding, flotation, magnetic, or gravity separation. All those processes eliminates that risk and cost and space and development time. So that was very key of why we're able to drive our capital costs down, is because of the simplicity of our technology. So it's not a complex technology, it's very simplistic.
No, I get that, and it's well documented in your presentation. The question I'm asking, and I need to understand, again, for new investors coming in, it's around the share register. Okay, you've got some people, you just said, been in this since 2014 at a similar price to today, and they're still with you. But to me, that they're still with you because they can't get out and not lose money, right? So if they start selling, it's going to drive the price down because it won't take much given your liquidity. So how do you, and this comes back to the earlier question, which is how do you show where the value is going to come for your existing shareholders and new shareholders coming in, where they can sort of see some growth and will stay with you? Because you could look at it and say there's a massive overhang on your shares because people who've been in this for 6 years have not made a penny, could have made a fortune in, I don't know, cannabis and pharmaceuticals and Bitcoin since then, have been static, right? So they're going to be kicking themselves and thinking, well, maybe I could have done something else. So what is the thing that shows them this company's going places? I think that's the one question I would like to understand from this interview.
I think what we show our shareholders is all the steps that we're doing, very sequential, very well planned out, and knock on wood, we've hit what we've been trying to do. Right. The market itself is something, the mining stocks haven't been in favor, as you know, rare earths haven't been in favor for sure. So we face those headwinds, and we could have stopped working in 2016 and just said, you know what, we're going to wait for the rare earth market to come again. Well, we did that in 2010. We entered it at the peak, like a lot of companies do in this commodities of, even using lithium and cobalt, and come up with the plans of where they're going to be, assuming these rare earth prices are going to last forever, and they never do. So we're looking at our project. We knew, and the governments knew, that we needed to continue to work and get these pilot plants, show the market we can do the oxides. So that was the belief of our shareholders, saying, wow, these guys are getting support from the government's supporting them when no one else will, and they need to be here because we believe the tailwinds are behind us of what we're moving into. And if we didn't do these pilot plants, we would just be another 3 year. I'd be sitting here saying we're 7 years away because we need to do pilot plant testing. We need to show that we can make a concentrate. Well, we've done that, and so now we can talk to the separators in real terms because we can actually give them product as opposed to the what if game. So that's our value proposition of where we continue to work when not many were. We were drilling our deep Fox because we felt that we needed to show when it comes up, and the supply and demands of the permanent magnets would need to show the magnitude of our deposit as opposed to just FOXTROT. There's other deposits that have a longer life than we had. We needed to show that this is a multi-generational play, and Deep Fox will give us that material to show that. So our compelling reason for our shareholders of why they believe in it is because we continue to advance our project. It's not showing in our share price, but it's certainly showing in the things that we've been able to accomplish.
Okay, you still buying shares?
Yeah, I participate when we do our rights offerings and our private placements and everything, and same with most of our, some shareholders still continue. I mean, it's the same group. It's almost like friends and family sort of financing in what we've been doing here.
Okay, and your G&A, I mean, what's your burn rate each month?
We have a very low burn rate. We're no more than 60,000 a month of those costs. So we look at that as a very low burn rate. I mean, we're starting to work in, sort of our white paper stuff now is, we're engaging our engineering study to now do the recosting of our processing facility, because the number in our PEA is 2016 numbers. Well, subsequent to that, we did 2 pilot plants that have reduced changes in our flow sheet, which are going to reduce costs. We've been able to increase recoveries. So from a PEA point of view, our PEA has value added to it from our testing, which isn't being shown up in our economics of using the FOXTROT PEA. So what we will look at is do another processing facility update of our capital and operating costs using our successes of our 2 pilot plant, and from that scale down to the 1/100th scale cost of our demonstration plant, so that we can go get that funded and built.
Okay. And do you think you are going to, I mean, I've seen the press releases. They're very functional press releases. Are you going to do more talking to your investors going forward? Now you know what you need to do to tell people, or you know what you need to do and what you need to say to people in terms of where the value is coming from.
Yeah, I really do. And one of the focuses, I've been involved in the government talks with the Canadian government and understanding the task force and really what's moving forward and how rare earths really fit into the North American rare earth supply chain. But more importantly, what is the importance of having a rare earth supply chain in North America? What are the jobs it's going to create? Is it the auto industry, the permanent magnets industry? What the military in the U.S. is a concern? Those are the drivers that are working. There's actually monies coming into the rare earth space because of that. They need to. The governments realize that it's very difficult for a company like us to fund with certain investors. To your point of your question is, where's the value here? But the governments see the value, and we're a strategic material, and that's what's really starting to come to fruition here. So we start to look at what also is, we're more than a mining story. Like what is the impact? The mining part of our story is, I think, fairly simplistic. We're starting to show that we can build the oxide. It's what you do with the oxide and what is drivers in that. What is the importance that we have a mine in Canada that can supply these oxides, and what are the industries it can affect? When you look at the automotive industry, for example, in Europe even, is very concerning, because as they move from internal combustion vehicles to electric vehicles, based on the mandates and their news disclosure of how much they're going to spend in the billions to convert, it's very significant to understand where's the source of the rare earth material going to come from. If it's all coming from Asia, well, that takes apart a lot of the value chain in those communities, because they have an intense supply chain to build their internal combustion cars already. Same with Canada and US. So it's as a rare earth company, these are the level of discussions that we have, which is kind of unique for a mining company, that we have to talk about why we're more than a mining story and how we're going to help industry or an economy grow.
Okay, well, Greg, that's a really good first introduction to your company and just helping people understand rare earths. As I said at the beginning, not many people understand it. Sounds very complicated, and there are easier things to invest in. But would you be happy to write something about the supply chain for our viewers, and we can put that on the website and give them access to that?
Absolutely. And because it is key to understand the complexity of it and where a company fits in in that supply chain, and really knowing where you fit in. It doesn't do me any good to phone up OEM to say, hey, I have rare earths, because they'll say, oh, phone my motor maker.
Yeah, exactly. Well, look, I'd appreciate it if you were able to help us with that and help our audience understand it a little bit better. That'd be brilliant. Greg, thanks for your time today. Lovely to hear your stories to say, and do stay in touch and let us know how you're getting on.
Thank you, Matthew.